Hey, it's Ken Parkin with Keller Williams. I am with Laura Witt today with Mortgage Architects. We are breaking some news, and it's not really breaking, but we are coming on and talking about what the Bank of Canada has just done to help people a little bit more, make it easier for people to qualify for mortgages. So let's jump right into it. Laura, how are you doing today?
Good morning. I'm great. Thanks. How are you?
I am doing well. Thank you. I'm doing well. Look, we've had a year of, and actually it's been a couple years now, of challenges for people trying to get mortgages and get approved and pre-approved for getting mortgages. The Bank of Canada has come out and changed the pre-qualifiers. Why don't you dive into it and let us know what's going on?
Yeah, so actually effective today, the Bank of Canada has dropped the qualifying rate, so more popularly known as the stress test rate. So it dropped by 15 basis points. Just on Friday, it was at 5.34, and it's down to 5.19 now. So that's kind of determined based on the big six banks posted 5-year rates, which have fallen up until June. They've been kind of staying constant since mid-June, but finally the qualifying rate has followed suit.
Awesome. So let's run through a scenario. We'll run some numbers, and if you're watching this and you're in a similar financial position, please contact Laura directly. We'll put her contact information below and at the end of the video, but don't use the numbers. We're using this as an example. So why don't you run through an example of how this has changed, how this has affected people?
For sure. So I kind of base my numbers using $100,000 a year for income, and also assuming that the borrower has the ability to make that minimum down payment. So that, as a reminder, is 5% on the first $500,000 or $25,000, and then 10% on the next $500,000. So the other things we're assuming is that they have good credit. And I haven't worked any property taxes, condo fees, or anything heat into these calculations either. So you'll find that you probably would be approved for a little bit less than this, but nonetheless, just on Friday, maximum purchase price for $100,000 income, assuming the 5% minimum down payment, would be $519,550 as the max mortgage. So max purchase price is $549,500. And as of today, that has gone up 1.5% or $8,500 to $558,000. So it's not necessarily a huge change or a huge difference, but hopefully that does help with kind of borrowers' thoughts around affordability, because up until this point, everyone's been saying it's too hard to enter the market, and I'm thinking the psychology of that change will help.
Yeah, so if we look at this and do a bit more of a macro view, where do you think this is pointing the mortgage industry, the lending industry? Where do you think the banks are going to follow, or are they going to follow suit with anything in regards to potentially lowering their interest rates?
Yeah, so I mean, interest rates have been coming down over the last few months already. So this is kind of the response to the big six kind of already decreasing their fixed rates. We did just have a Bank of Canada overnight lending rate announcement on the 10th, and there's 3 more changes that would affect more of the variable side of things. As far as the overnight rate is concerned, there's been a couple people out there like JP Morgan and CIBC I've been reading lately that are saying that the overnight lending rate is actually going to be decreasing in October. I'll go on record and say I don't think that is going to happen. We're still kind of below that neutral range of 2.5 to 3.5 at 1.75 right now. And the underperforming GDP measures that we've been seeing lately are in response to the rate increases about 3 quarters ago, and that's how long it takes for these changes to kind of make their way through the market. So I think the dampening effects that were put into effect 3 quarters ago are playing out just the way the Bank of Canada wanted them to. I don't see any changes on the variable side. And as far as the fixed side is concerned, you just want to keep an eye out on Canada's 5-year benchmark bond yield to see which way it's trending. It has been trending down lately, and we've seen fixed rates come down accordingly as well since then.
Right, and that fixed rate sort of follows that trend fairly closely. So if you are thinking about doing something, it is definitely you definitely want to keep your eye on it. Let's wrap it up here. And where can people reach out and get a hold of you if they're thinking about making a move? They need to get pre-qualified. And as a realtor, I want to make sure that anybody that is thinking about moving and you've got to purchase a home, that you should at least talk to Laura and get pre-qualified ahead of time. That way you have a very clear understanding of your financials, know what you can afford. Laura keeps you up to date also with any changes. So if rates do go down, or if potentially they may go up, you've got time to act to make sure that you get in before any of those things happen, or take advantage of the lower rates. Where can they get a hold of you?
So you can find me on Facebook. I'm at GTA Mortgage Agent, or you can also find me Laura Witt Mortgage Agent, and also on Instagram at Laura Witt Mortgages. Awesome.
We'll put your details down below this video. Laura, thank you so much for popping on. And if you're thinking about making a move, give me a shout. We'll make sure we get in touch with you, get you in touch with Laura as well. Have a great day, guys.